Hey guys, it's Remo, and are you thinking about maybe selling your home or buying a home? Well, let me tell you what's happened with interest rates over the last really 3 or 4 months, starting back from November all the way to today, which we were in February. And so over the last 4 months, interest rates have gone up almost a full percent. And so it might not mean or might not sound like it's a lot, but it definitely is. So we put together 3 different examples. Someone purchasing at $600,000 with 20% down, $800,000 at 20% down, and $1,000,000 at 20% down. And what their payment changed from back November to today. So again, let's start off with 600,000, and I got my little notes here. So at $600,000, putting 20% down, your total your total all-in payment would be about $2,635, and that's principal, and interest, taxes, and insurance. So all the numbers I'm giving you are for the full payment. Now, that was in November when interest rates were closer to 2.75. In December, as they inched up to 3.125, that payment would have been 27.31. In January, it shot up to about 3.625, and you're looking at 28.64. And currently at 3.75, your total all-in payment is closer to $2,900. So that's a jump of about $300+. Now, if you say, well, I want to maintain my same $2,635 payment, where's my purchase power now? And so over the last 4 months in that same situation, maintaining that $2,635 monthly payment, your purchase power dropped from $600,000 all the way down to $530,000. That's $70,000 in purchase power gone by the interest rates going up 1%. Now, at $800,000, that same principal and interest payment back in November with a 2.75 interest rate, you're looking at $34.95. In December, when it went up to 3.125, that payment is $36.25. In January, when it went up to 3.625, your payment would have been $38.02. And in February, as it went up to 3.75, your monthly payment all in would have been $38.47. And that's almost a $400 increase just because one interest rate. Now, again, maintaining the same payment back in November, if you say, well, where did my purchasing power go? Your purchasing power went from $800,000 all the way down to $705,000. $95,000 gone with the interest rates going up that 1%. Now, at $1,000,000 back in November with a 2.75, your total all-in payment would have been $43.58. In December, when interest rates went up to 3.125, you're looking at a $45.19. In January, when it was 3.625, you're looking at a $4,740 payment. And in February, that $1,000,000 mortgage payment with 20% down, you're looking at $4,797, so almost $4,800. Maintaining that same payment back in November, which was $43.58, your purchase power now with that same payment is dropped about $119,000 all the way down to $881,000. Just because the interest rates went up 1%. So what does all that mean? So if you're thinking about selling, obviously your pool of buyers that were looking at your, whether in this example, $600,000, $8,000 or $1,000,000 house, now they can only purchase less than that in the past. And so it decreases the pool of buyers. Now, in this market, we still have a lot of people interested in buying, and the market is still strong. However, what ends up happening is homes tend to start sitting a little bit longer on the market this month and then next month. And then we start seeing this kind of inverse in the market where we start seeing kind of a callus where the market starts going in a different direction. So if you're thinking about maybe selling, you definitely want to consider doing it maybe sooner than later. Waiting towards the end of the year when interest rates gone up, it's just so much more expensive to purchase a home. And so you're going to get people either that get put on the sidelines because they're priced out because they no longer afford that house, or they decide to maybe wait until prices tend to obviously go down when these interest rates go up. Now, if you're thinking about buying, again, obviously buying sooner than later is important because money is cheaper now than it will be towards the middle of the year and towards the end of the year. And as of right now, the Fed has come out and says they're anticipating 3 interest rate increases in 2022. and a few more in 2023. So interest rates are not going to really go back to the twos in the near future. So again, if you're thinking about buying, you definitely want to move fairly quickly. And if you're thinking about selling, same goes because interest rates impact you as well. Thanks for watching. If you know anyone that's maybe interested in hearing this information, now this is not for everyone. This is a very detailed video for those that are very analytical, that likes to see the numbers. This video is definitely for you. So if you know of anyone that would appreciate this, feel free to share this along. Drop a comment down below or send us a text message or a DM. All the best, and we'll see you soon. Bye.